Hello guys, good afternoon once again. It's 3:56 p.m. on Tuesday, 21st July 2026. I made a post on Facebook about gold and I was looking for a bullish buyers on gold. And I don't know what is happening today. It seems like I am getting the entry wrong or something like that. Right. So today I talked about entry for Euro USD and I've already explained GBP USD. So this is Euro USD, and you can actually see that I missed right here. And this is the dollar index. Dollar index is already going for this target. Um, Tuesday. So I was wondering if I could possibly get the entry wrong, or we see what tomorrow we're gonna do. So this, I think the fair value gap measurement, I got it wrong. It should be this and this, and then it used 50%. Let me use rectangle 2. So it used 50% to buy, and that happened on New York, right? Or was it London? Yeah, it happened in London. During London opened. Then for Euro USD, we're gonna talk about gold today, right? Then for Euro USD, it used the fair value gap right here to sell. Then I noticed also 3 hour time frame. It used an old block. That was a sniper entry for from the 3 months, 3 hours time frame. So yeah, what I used was 4 hour. But we see what tomorrow gonna do. So now let's go over to gold. Gold also looks like I'm gonna miss the entry. So the analysis was done on FXCM broker. All right, so this is what I saw right here for entry for price to trade back into this fair value gap and then go higher to previous week high. After taking previous week high, I have this buy stop as a target. I'm expecting this to go and take liquidity that it needs to use and sell. So let's go over to the whole breakdown analysis on gold, why I activate my watermark. So we have gold right here, and this is the 12-month time frame. I was actually recording a video for this, but after the recording, it happens to be it was breaking, like my recorder was breaking some parts which are important, so I did not upload it. So I'll have to redo that. So this red horizontal line is previous year's high, which is the 12 month. Below the previous year's high, we have this fair value gap right there. So I don't know whenever gold decides to come down there. All right, I don't know. So 6 months time frame. This is the previous 6 months low. Previous 6 months high is very, very high right there, which swept previous year's high, and January maintained that high. Below, okay, this is the fair value gap that we have, and also this one. So we have this. Okay, now another thing that we should take note of is that we are inside this blue candle range. Like this is our daily range. All right, we're inside this candle. So that's why I refer to it as a daily range. So we have already taken the buy stop. So looking forward to see if price will be drawn to the sell stop and trade deep into this fair value gap right here and close for the year. Because I'm not expecting gold to return back to this high that January gave us. I'm expecting that January high to be the high of the year 2026. Down to the monthly time frame, this is what we have. This black tick line you see right here is actually the opening price of this year. So I'm labeling that as 2026 opening price. 2026 open price. All right, so we can now run down to the weekly time frame, and also let's go back to the monthly time frame. So this monthly time frame, you can actually see I said I was looking for it to sweep this high. So that liquidity that I'm expecting it to take before it sell is referred to it trading back into like balancing this big engulfed candle, like 50% of it, right? So it has to sweep this month high and then look for a confirmation to take a shot. So we go down to the weekly time frame. This is our previous week high. This is our previous week low. This week opened, and I'll show you why I think it's not gonna go to this low and this low. but go for the previous week high, take liquidity, and then use that liquidity to sell. Running down to the daily time frame, which is the time frame where I saw everything. So let's now dive into the breakdown analysis. So I talked about Monday giving us a structural bias for the week and how the weekly candle is going to close. And seeing how today is trading above previous day's high, it tells me that I'm not going to be looking for a bearish trend or a bearish market on good, but a bullish one to be drawn to previous week high, take this high, and then trade back into this opening price. All right, you can actually see the reaction that we have on that opening price. So let's first of all start at what happened when market opened. So market opened January, we trade high, we trade low. This is a deal range for January and February, right? This is a deal range. So price returned back into it with a bullish structure. You actually see high, low, high, low, high, low, high, traded into a premium and then violated by breaking this order block and also trading down into this inefficiency that we have here, which is where we have the breaker structure, right? We don't have any structural shift. This is just a structure that is being printed to fill up every inefficiency and trade into premium. We violated it, we trade back into premium and then sold off back into the opening price. But when it traded into the opening price, what it did was a sweep of that opening price. So we now have a new range, a swing high and swing low. Price trade back into it, filling up inefficiency that we have right here. You can actually see that inefficiency from your weekly time frame. That is a CB, sell side inefficiency. So we trade into it with buy order to balance sell side and buy side, trading into it with a bullish structure, high, low, high, low. We have a hunt right there as it traded into the fair value gap that we have right here on our daily time frame. Then it now gave us a shift right here by breaking this demand right here on our daily time frame. Then price returned back into the premium, right? Why I look at this as the order block, because this was the buy candle responsible to take the high, and then we now have that breaker structure. We shifted bearish and we now return back to the opening price. And this time we fully broke the opening price. Market returned back into the opening price. Use that as an area of resistance while filling up inefficiency right here and then sold down. So now our new deal range is this high and this low. That is the range that I'm dealing with. So the market opened on the month of June. We traded higher into equilibrium. The 50%, you can actually see that on my Fibonacci. We traded into it, we now traded down, and then we're having a failure to go for this low. Now, let me tell you what I'm saying right now. Looking at gold, I can actually say that there is no area of inefficiency, no sell side imbalances, no bearish order block or supply zone on the daily time frame that can be used, that I see, or that can be used to keep on selling gold. Since that is not seen on this daily time frame, then I am not expecting gold to go bearish because it has showed the failure to go below this external low. Now, for sure, we've been trading bearish since July, first week of July, right? High, low, high, low, high, low. This is a drawdown, but it did not go for this low. It did not break this low. Rather, it showed a reversal. So seeing this reversal and seeing what Monday did and seeing how Tuesday is behaving by trading above previous this high, that tells me that I'm looking for a bullish market. I'm going to target previous week high and also this month's high, and that could be August, trading into that and returning back to this premium pricing, because this is our main structure. This is our main deal range, this high and this low. Price trade into equilibrium, trade lower, failed to go for the external low, and now is returning back to the premium. So when it gets into that premium, I'm not expecting it to go and take this high. That is what I am anticipating. It should reject from there at the premium and then keep selling. So August, I'll be looking for bearish markets still, and we're looking for you to trade all this inefficiency that we have right here. Yeah, so the confirmation will be seen first week of August. So this week, I'm looking for a bullish market for gold. So it needs to kind of take this liquidity, use that liquidity to take a shot. All right. So why I am anticipating is not to return back to this high. So we can now run down to our time frame and we'll do our analysis. So this is June. June showed us a bullish structure when it shifted by breaking this high because we have high, low, high, failure, structural shifts, break of high right here. So we now have, what is the confirmation to that? We have this bar side inefficiency that price traded into, but it's used this as a mitigation block to buy while still printing the bullish structure, and it got to this high, and then price traded to this other block or demand zone, and then it failed. All right, that demand zone failed to push the price higher. We now broke it, return back to this other block, which is the main structure for, saying you're having higher lows. Now this one is a trap. So we trade into it. If you have a stop loss, it's hunted to stop loss. So this other block is not strong. And while it tried to go higher, it failed. All right, there was no structural shift because there's a supply right there that is going to go against it. That is an opposing side of the market. So we pushed it lower. We came back down because we have a structural break now. We returned back to what is responsible for that, which is this other block. Price trade down. This was trying to oppose it, but did not by causing a failure right here. Price trade down. And what we actually have here is a purge. Price swept this low. It did not break that structure. All right, so I'm deleting all of this. But the main thing is saying it's not going for this low. All right, so now this week opened. So normally most traders will be on this place. Now there's something I've noticed in the market since my years of analyzing, and that is when the market is closing for the week and closes at your point of interest, that is your area of supply or demand. When market opens, it is going to hunt that your point of interest is going to kick it out of the market. All right, I've experienced it a lot of time, and I think you too should backtest it and you'll see. So this week opened Monday. This is Monday. Monday opened trade high, trade low, and did not show confirmation that it wants to go lower. You will see that on your 1 hour time frame. All right, because this is a high from the 1 hour. This is the low from the 1 hour. We traded into that supply zone. Right. So if you're expecting to go bearish, it should impulsively trade lower and break this low. Right, but it did not do that. It ranged, not showing your confirmation to go short, and then we finally break Monday's high. And the break of Monday's high happened on Tuesday. So remember, I always say that Monday is, we don't trade Monday because Monday is what is going to give us a directional bias to have for the week. So when we see an impulsive break, then we can tell, all right, we're having a pump of money into the market, we're having inefficiency, so we need to look for price to return back to that, and then we'll look for an entry. That was why, so this is my confirmation, all right, to go bullish on good. And I was looking at this to return back to this 3 hour fair value gap. And now I'm watching it and it seems like it's not trying to do that. For the reason that I mistaken it. All right. So those that are very good at fair value gap, I salute you. You're very good at it. Me trading fair value gap is very, very confusing because when you're trying to refine it on different time frames, like when you're going from time frame to time frame, trying to refine it, you might possibly not like get it correctly. All right, so it's just for you to look for the perfect time frame that you're gonna use for that your fair value gap. And seeing it on the 4 hour time frame, it actually makes sense because this is this here was balanced, right? And then this is the origin of the impulse on our 4 hour time frame. So we have this low, and then sorry, we have this candles high, and then the next bullish candles low. That is what we're looking at. So we are now looking at the 50% retracement, and I think good return to the 50%. Let's use rectangle 2. So right here, it actually returned to the 50% right here, and he's using that to buy. And I think that plays along with sessions. So that happened on London session, and then New York is what is pushing the price higher right now. So yeah, I will not be diving in because what I was only focused was the 3 hour time frame fair value gap that I saw right here, because it's below previous this high. Like that is where I see as the origin for the bullish move. Um, so yeah, so you just like I always say, whenever we have a sweep or a break on a high, we are looking for what is the cost of it. Like the origin is always there. There's something that is being popped into the market to break that high. So it's like a cause and effect. So the effect is that we have a high being broken or a low being broken. Now, what is the cause of it? So it's just a simple physics theory, cause and effect. So same thing with the Richard Wyckoff book about accumulation and distribution phase and stuff. So now targeting previous week high and still looking forward for it to go and take this high, trade into the premium and find the reaction to sell from here. Because looking at this, all I can tell is that all of this right here is a trade line liquidity pool. We're having a pool of liquidity. So it doesn't make sense for me to be looking for shorts when I've already seen that every area of inefficiency has been filled up. There is no point of order block, like bearish order block or supply zone or a favorable gap valid or seen for me to take a short. So only thing I've seen this week was a bullish market on gold saying its refusal to go below this low. So expecting it to return to the premium of our major swing high and low. This is the D range. We are inside this high and this low. This right here is an internal liquidity. The price needs to go and hunt. They need to go and take the liquidity. And once it does that, if I'm anticipating a short, I will see my confirmation on the 1 hour time frame and we'll be looking for that short because I am expecting the price to go to this liquidity also. But it needs to take liquidity to be drawn to liquidity. And that liquidity that I feel like it needs to take is this high pool of liquidity. Because since this is a trade line liquidity, that means there are traders who have that short position right here. It's like saying you have your break even stop loss, on this high. Their liquidity is resting on every and each of this high. So it needs to go and be taking those liquidity one by one so it gets to the premium, and then I look for the confirmation to take my shot in the premium of this hour dealing range on good. I hope this is helpful. Give me a follow, give me a like, give me a subscribe, give me a comment, share your thoughts with me. I will reply with you. We can communicate and share ideas with each other. This is the part of the learning process for you and part of the learning process for me by sharing everything that I see, sharing my journey on the market and my analysis and stuff. So see you guys on the next video. Take care and be safe. So I'm glad price was doing as I anticipated to do, but difficulties with my entry, right? So starting from euro and now good. So Nasdaq, still looking for Nasdaq to trade. Wow, it has already traded into that fair value gap on the daily time frame. So we're waiting. Let me use my Fibonacci to look for a premium. This high, this low. So our premium is 70%. Right. So I'm looking for a reaction right there, possibly tomorrow. All right. So my anticipation is for it not to go above this high right here. So this big body candle is still the order block, right? So it's in line with the favorite gap. So yeah, we see how it reacts on that premium pricing. That's all I have. So if Nasdaq kicks me out and still continue to go higher, then that's fine. We accept it that way because I know there is a pool of liquidity like this, but still there was no bullish structure like formed. You can actually see right here. We can tell this is a ranging market, not a structured market of bullish or bearish structure. So still looking for a reaction at the premium pricing on Nasdaq, and if I see a confirmation on the 1 hour time frame, we'll be taking that shot to target this liquidity right here. So that's all I have. Take care and be safe.